This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self Storage Podcast. I'm your host, Scott Meyers. One of the most overlooked expense items related to the valuation of a self-storage facility is the line item expense for insurance. However, as our next guest, Brian Bogdanoff, will discuss, it's way more than just a line item that must be negotiated and put in place before you can close. Property insurance covers your asset and the business against catastrophic losses and even the pesky nuisances of being both a property and business owner. Now, Brian is a vice president and partner of Insurance Office of America, an industry leader in offering risk management solutions to the self-storage industry, and holds 2 Bachelor of Science degrees from Florida State University in both risk management and insurance and finance, and has been a licensed insurance broker for 15 years. He also holds a commercial lines coverage specialist designation and is also a passive investor in real estate syndications, including one of our own. Brian splits his time in both Florida and Pennsylvania with his wife Allison and their 2 daughters, and he is an active triathlete. So without further ado, let's dive into my wide-ranging conversation with Brian Bogdanoff with the Insurance Office of America. Hey, Brian, welcome to the show.
Hey, thank you, Scott. Appreciate you having me on here.
Well, I appreciate you taking time out today. I know it's been a while since we've been able to sync our schedule up and be able to make this happen, but I'm glad you were able to make it so that we can delve into a little bit more about your background and your business. And if you would, I gave everyone the intro before we started here, but if you could just maybe fill in the gaps and get us up to speed as to kind of how you got into the business and where you are right now.
Yeah, sure, absolutely. I started in the business in 2005, which would actually be the best time ever to really dive into it, because that's when self-storage, as you know, was really ramping up. A lot of construction going on, a lot of facilities, a lot of areas where people never even heard about. A lot of self-storage just being built everywhere. I wasn't a private investor at that time. I was just in the insurance business, and I got out of school, where I went to Florida State University and graduated with a risk management degree and a finance degree. Anyhow, I graduated out of school, and my family's always been in the real estate business, and I just needed to pick a specialty to go after and introduce myself into, where I can network with owners and operators and be successful doing property casualty insurance. So I decided that the self-storage sector was going to be the one, and just kind of got off the ground running and really read as much as I could, talked to as many people as I could. I joined state associations, went to all the national events, and just tried to learn the ins and outs of the business as well as possible. And in the meantime, I furthered my insurance knowledge and helped develop a number of different programs out there to assist with risk management and insurance placement for the unique risk of self-storage. You know, there's a lot of different aspects of it compared to multifamily or just shopping centers. There's just a lot more to the business side of it. So I was able to develop a lot of policy form to relate to the industry. And that's that's really where I got started. And since then, I've been more of a passive investor in a number of different projects, as well as just growing the industry. I currently handle over 3,000 self-storage facilities on their insurance, doing the property casualty and tenant protection, and just became nationally recognized throughout to assist owner-operators with all their insurance needs.
Well, Brian, you and I started out at exactly the same time, and the way you described it is the way it was, and that is a great time to get in. There was a lot of funding available. It was still this, in the way I saw it, kind of an untapped sector in commercial real estate, where investors had come in that just didn't really understand it and really understand what a great business model it was in terms of investing in real estate. And as everybody knows, and I constantly say, the beautiful thing about storage is it doesn't have the 3 T's, the tenants and toilets and trash. And so, coming out of apartments and houses, I was excited to see that at that time that there wasn't a whole lot of competition. But as you mentioned, no, there also wasn't a whole lot of education out there, and I went through the same machinations that you did, and learning about the business by going on to the trade shows and getting my hands on as much as I could. But interesting approach. I was looking to get into learning about the business, at the same time doing the same things that you were doing, so that I can invest in it actively by buying facilities. And you were taking a different approach, in that you were learning about it, and also from an insurance standpoint to gain, if you will, an active income until you build a book of business, but then also getting that critical knowledge that allows you to become a better passive investor. So tell me about that. Was that a master plan from the beginning, or did that just kind of happen organically?
When I graduated from college and kind of dove into the industry, I just didn't have the personal funding to dive into it myself. And so from an insurance standpoint, that's always been my passion, to help business owners with all the insurance needs. But over time, where I've grown my own book of business, I've been able to put away some money, and I've always looked at real estate as something that I've always also had a passion in. So knowing enough about the self-storage industry and the ins and outs of that business, I always found it so fascinating. I thought it's such a great business model, like you said, and that's just something that I've always wanted to go into. So as soon as I was able to put some money together and tell a lot of friends and family about, it's just something that I've kind of grown into, and just want to keep that going, because I think it's still such a great business model. It's, a lot of people say it's almost recession proof, and but that's always up for debate. But but I just think it's such a great business, and it's been a great investment for me, and I haven't had any, knock on wood, that have really gone south. You just have to. I think the hardest part in this market is being able to buy it right and understanding the ins and outs of it. So, it's not as easy as some people might think it is, where you can just buy one of these and it's just a cash cow. You got to put the put the time and energy into the facility. It's not just going to make money by itself. So it's a common misconception that I hear about this industry. But any successful self-storage owner operator knows there's just a lot more to it. So I've had it's been great that I've been able to be a passive investor. I'm hoping to take that to the next level, hopefully in the next year or two, where I'd be able to own and operate a facility as well. So that's kind of my personal goals.
Mm-hmm. Well, one of the beauties, and we talk to a lot of our students about being a passive investor even before you own one, is that with a small amount of money, you get access to the deal. You get a chance to go through the entire process of how to analyze the market, how to analyze the P&L, the numbers itself, and peek into the under the hood and look at the business plan of a project that you can invest in, because that is part of all the due diligence that is made available to you. So, if it's something that you can't do on your own, and put an entire deal together, what a great way to use most of other people's knowledge and experience and other folks' capital pooled together to be able to learn about it. So let's, and I want to get to the insurance piece here as well, but and in full disclosure to everyone listening today, Brian is our go-to guy for insurance. Anytime that we have a new project coming online, he doesn't get 100% of our business, because it all does depend upon the coverage. First of all, making sure that that is adequate, and then the pricing. But he is always the first call, and is always in the mix, and has probably 99% of all of our insurance. But also Brian has invested in our projects and our syndications as well. And so I wanted to kind of pull on that thread a little bit. Brian, why don't you, as a passive investor, why don't you speak a little bit to, obviously we know the asset class that you're interested in, self-storage, but when you're analyzing a PPM and you're looking at investing passively in a syndication project for self-storage, what are the things that you're primarily looking for? What type of investor are you? Are you long-term wealth building, or cash flowing right up front? Tell us a little bit about that, and then also the types of deals that attract you the most, and why.
Yeah, absolutely. So I'm personally, long-term is my goal. There's always those deals that say, it's going to be a 3 or 5 year hold and flip. I'm in it for the long haul. I think it's, I'm all positive for this asset class. So when I look at a deal, what they always say about real estate, location, 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 right? So I always look at location first, That's most appealing to me because, I want to make sure it's in a well visible area, and Scott, you go over the visibility of the facility. And I think to me, that's something that's really important. I also look at what we can develop there. Is there room for expansion? If so, I think that's a huge benefit to any property, as well as if there's room for any parking. I think parking itself is so valuable, especially in some areas, if you're near a waterway where there's a lot of boats or RVs and vehicles that can get parked there. That land is so valuable, and there's not really tons of maintenance that has to be done to it. So there's a high profitability, and I have a lot of friends that are in this business that are strictly just doing the parking lots in certain areas, which I think is just great. A lot of facilities now too is we even see a little retail aspect to it. There might be 2 or 3 or 4, small tenants in one of the buildings in the front, and you've got the storage in the back. So I always look at what that expansion would look like. Also, you want to look at the market rates. You want to know, what that looks like in the area as well as your competition. I think a lot of these larger companies, they've got the software and systems in place where they're really just looking to see the population in the area and where that facility is going to be built in retrospect to your surroundings. If you've got somebody just on the street next door and they're 60% occupied, it might not be such a great area. So, there's a lot of little factors that go into play when I look at a deal, but I think what's really helpful is knowing that you've got the right partners to make it happen. When I've looked into the deals I've invested with Scott's team, I was just very comfortable knowing that everybody involved is an expert in their field. They know exactly what they're going to look for, what they're going to do to that property, and they come up with a plan. And that to me is giving me the comfort level, along with their backgrounds, to do that investment. But I think there's a lot of factors that go into that decision. It's not just so easy just to throw money at something and just pray. Prayer's not really a strategy. So I like to do as much due diligence beforehand to make a smart investment.
Yeah, we do pray around here, but prayer and hope, you're right, is definitely not a strategy. And, it's interesting when we talk about, as we coach our folks on how, when they go out to raise private capital, the things to look for in analyzing the deal, but also realizing that passive investors like yourself are going to be vetting them. So you're looking at the deal, you're looking at the market, the things that you had just mentioned, but also vetting the syndicator, the promoter as well. And so putting your best foot forward and having a track record and highlighting your successes and hopefully along the way continuing to minimize any losses or anything else that would keep people to or cause people to lose confidence and not invest with you in the first place is huge. And so we're thankful that, well, first of all, thank you once again, Brian, for your confidence and your trust in us. But I'm also shocked at the amount of people that do trust in us, and I shouldn't say it in a negative way, but that they would invest in our deal or any project without really vetting or doing their due diligence on the promoter or the syndicator. It may be on the the website or that they have, or the deal itself, or if somebody else has already invested in it, without going through and doing proper due diligence. Thankful for the trust people have in us, but I'm so surprised that people would invest $50,000, $100,000, $150,000 in a deal in which they didn't really know the promoter or the syndicator.
Oh yeah, absolutely. I am too. I mean, just people that don't know enough about the business that they think they're just going to get into it and it's just going to make money. And I think it's like what you said. If you vet out the right people, there's just a lot of diligence that needs to be completed beforehand. So, but your system is great because you've got access to the tools and the people to come up with the whole business plan, and the way you present it is really helpful in understanding on how everything works. So, the comfort of putting that kind of money up front puts my mind at ease, before I make that type of investment.
So, Brian, what I did want to come back to, let's get back to the insurance biz and your specific biz. And the good news is that you have access to a number of different providers, carriers. I mean, you're in this day in and day out. You're not just representing one company or working with one company, but several. So, outside of the norm, which is we know that first and foremost that we're looking to be covered. I mean, insurance is placed to cover catastrophic and business loss, and making sure that you have the proper coverages in place. And I think most of the folks are familiar with that. And then obviously everybody's looking to lower their the annual outlay for insurance, because it's on the P&L. And we know that that's important. And any time that we can try to negotiate that, or at least make sure that we're covered with the least amount of money or outlay as possible, that makes sense to the bottom line or the NOI. So, barring that, without having to rehash that, we're mostly business owners that are listening right now. Tell us, what are some of the other considerations, or even just things to look at, ways to be able to perhaps even lower those costs, making sure that you're covered, or being able to recoup that you're seeing that maybe most folks may not have heard about, or aren't really looking into. Maybe some of those, I guess, hidden gems or strategies from an insurance standpoint that you could share with everyone.
So I'm with Insurance Offices of America, and we're the third largest privately held agency, and we have access to all the carriers that represent self-storage facilities and underwrite it appropriately. That's really important, because if you have access to all the carriers, obviously you can bring those different quotes to the table to my clients, and make sure that all the quotes are comparable and they're not missing anything. Now, the one thing that's most important for any business owner to realize is that risk management in the workplace, safety practices, is what really drives the insurance premiums. Any insurance agent out there can get a quote. You answer 20, 30 questions on an application, you submit it, out pops a quote. But if your agent's not representing you and telling the story about how your facility operates, what are some of the things that are built at some of the characteristics that are built to prevent risk? Is your facility fully gated? Is there an alarm system? Is there video surveillance? Does the manager check the premises every couple hours? Are they going through each lock and making sure there's nothing was tampered? If you're in one of the areas that has snow, are you contracting with a third-party snowplow company to salt the facility and make sure everything is safe? Are you making sure that every contractor's on site carries their own insurance and names you as the business owner as an additional insured, which basically shifts the liability back to that company if something were to happen? If you have the right risk management and safety practices in place, and your agent's telling that story to the insurance carrier, you're going to get a much more favorable result in the insurance marketplace versus here's 20 questions, let me just get you a quote. Also, your agent needs to dive into what other operations you have. If you're doing auctions on site, you've got to make sure you've got the right and proper insurance coverage, like sale and disposal liability. There's specialty coverage called customer goods legal liability, and that provides coverage if the owner-operator is found negligent and damage the customer's property. Even though the lease states that you're not responsible for it, it doesn't mean that somebody can't file a lawsuit that you as the owner-operator are negligent in the damage to their property. So you've got to make sure you've got those type of coverages on there for protection, as well as some hidden coverages that you probably don't even know if you have it, such as cyber liability, which has become a more known risk. You see it in the news on some of the large public companies where there's a data breach or hack that steals private information or identity of customers. There's pollution liability. I mean, if somebody, for example, this happened at one of my clients' facilities the other week, where one of their tenants, and they didn't know about this, was dumping oil into their sewer. They got a call from the EPA, and basically it's going to be about $30,000 to clean that up. That's not typically in an insurance policy unless you buy a separate third-party pollution policy.
Right. And
most owners don't really think of stuff like that. Or they say, oh, I've got cameras. Oh, my manager's on top of it. These are, you buy insurance for catastrophic type of events that you really don't think about. And the financial impact of something like that, a $30,000 check, when you're not ready to cut it can be really devastating to your business. So, again, that was pollution liability. And then, workers' comp, some states it's optional. Some states require it based on the number of employees. The employment law is a big one, such as the whole Me Too movement, where, discrimination, harassment, sexual harassment, age, gender related. You want to make sure you have that type of protection. Again, attorney fees alone are going to run you, could run you $25,000, $50,000, $100,000. So having the proper insurance for these items, in the long haul of things are really minimal. You've got to look at what your risk is and decide whether you want to finance it through insurance, or there's also risk management practices that I work with my clients on, that if you choose to self-insure for those things, I'll say, well, here's some ideas on what you can do to prevent these type of claims. But again, you tell the story on how you're doing things the right way or how you're minimizing your own risk, you're going to get that better outcome, and it'll have a good impact on your insurance premiums long term.
One of the things that I wanted to ask, Brian, that you brought up, so there's been a question that we've had come in a few times, and that is the difference between, if you could explain the difference between, tenant insurance and what we offer and what we can offer at the store level in terms of, because we don't sell insurance, but we can offer tenant insurance. What does that look like, and the difference between that and tenant protection, and what does that mean to the owner?
So tenant insurance is basically an insurance product, and when a tenant takes out a tenant insurance policy, there's policies that are issued directly to your tenant, and that's between the tenant and the insurance company. The difference between tenant protection and tenant insurance is tenant protection is you are basically, as the owner operator, assuming liability for your tenant's goods while they're being stored in a locked unit. Now, when you're assuming the liability, don't think that you're on the hook for your tenant's goods. You're buying an insurance policy. It's called a CLIP, a contractual liability insurance policy. And when you buy that policy, it covers all the risks that you are stating in your lease addendum to your tenant that you're assuming the liability for. So this basically surpasses any type of insurance regulation. So you don't have to be licensed or anything. And an owner, what they do for the tenant protection is there's a 1 or 2 page addendum that they just put in their lease that the tenant's going to sign off on it. And it basically provides the tenant the notice that, hey, here's what we're protecting you for. And then they're going to get billed as part of rental income. So the difference, there's insurance and then there's protection plan. Both of them are really favorable to offer to your tenant because it's going to minimize the risk to the owner operator. And both products, also the owner is able to make additional income by offering these products as well. So our agency, we don't offer a tenant insurance product, but we do. We have an A++ rated carrier that backs the tenant protection product, and the profit margins to the owners are really substantial.
Great.
It does cover most perils as well. I mean, just to list a few. I mean, fire, vandalism, theft, smoke damage, vehicle damage, any type of water damage, such as like a pipe burst. And then there's always things that, the facility may not be covered for. So for example, a common peril would be flood insurance. But what's nice about, if there's something that you want as an owner to offer your tenants, there's a couple ways to do it. One, your tenant insurance provider hopefully will be able to add it to the policy. If they don't, then you have to purchase a separate policy for that. If our tenant protection program, if it doesn't offer a peril such as flood, you can still choose to write whatever you want in that lease addendum because it's your addendum. So what happens is you can choose what you want to provide in addition to that coverage to your tenants. However, whatever you're insuring it for is where the insurance carrier would pick up the cost for that. It's both products, there's different deductible options that are available. So for like insurance or tenant protection, you can get a $0 deductible, or you can take a higher deductible. It just depends what your appetite for risk is.
Great. Thanks for clarifying that. It filled in the gaps for myself, even a couple of the areas, and I thought I knew what the difference was between the two. So I appreciate that. So as you're walking through that, and also another example that you listed, I'm thinking of the commercial, and I won't say the company because I can't even remember it is, but where the actor says, we covered a lot because we've seen a lot, or something along those lines, where they go through the different scenarios of mishaps that can happen if you're not covered by insurance. Tell me one of those stories, if you would, or even just an instance in self-storage, maybe one of those, way out stories that, may not have happened, or somehow that you were able to help somebody through a difficult situation in which they never would have been expected to find themselves in, with regards to, a challenge at a facility that involved insurance.
Oh my gosh, Scott. I mean, we can be here all day. It's amazing.
Yeah, that's why I said just pick one.
It's everyone says, my facility, it's run perfectly, never had any issues. But the reality is we buy insurance to ease our mind and also in case something was to happen. And I mean, I'll just name a couple instances that we've seen over the years that I think are just, one, some of them amaze me, and then two, I feel like I've seen it all, and then the next day comes and it's like, oh my gosh, I didn't think that could ever happen.
Sure.
I've had people stop in front of a gate, get out of the car to throw something out of the trash, and the gate hits the person in the head. And that would be more of like a liability claim that would pick up the medical expenses for that person. I've seen slip and falls on sidewalks, just walking into the office. I've had people open the door to the office and jam their hands in the door and have to go to urgent care. I've had people with the roll-up doors. They claim that they just weren't lubricated properly, and they had to lift it, and they end up extending their arm, and they end up in a cast. Let's see, I've had a delivery truck. Delivery guy came out to unload some pallets into the unit. A pallet fell on him, and he didn't make it. So that was pretty devastating. We've had plenty of fires. We've had oil kept in units, tires kept in units that had to get cleaned up. Unfortunately, there's things that you really can't prevent, such as wind events or tornadoes or hurricanes, and we've had some serious and devastating losses just from those items. And it's always tough, and I work with my clients to make sure that the insurance carrier's on top of it, the adjusters are working properly. We have our claims department within our company who are also licensed adjusters who understand the ins and outs of the policy forms, and they assist in the process to make sure that these claims are getting paid promptly and fairly. Because you hear so many stories that say, oh, the insurance carrier is taking forever, or they didn't pay for this or that, and that's what really we're here for. We're advocates for our clients. So, I work hand in hand with everybody if there is an issue, and I expect the same. As full disclosure, my clients, tell me everything that's going on. They give me, adjusters information just as I have it straight from the insurance carrier, and I make sure that we have conference calls and everyone's on the same page, because that's how I would want it, if it was my business. So I can totally understand what they're going through, and I just do the best I can to help. So, making sure and that they have the right insurance carrier behind them. I make sure that all the carriers are A-rated, and that they're not missing anything in their policy is key in providing it. I tell my clients, focus on running your business, and I will make sure you're insured properly. And I know it's a big expense, but it's something that's definitely necessary. It's part of the business and part of running your self-storage operation efficiently. So it's definitely something that shouldn't be overlooked, and it should be reviewed each and every year.
Well, and again, Brian, we appreciate the approach that you take, and you certainly wouldn't be on this podcast if you didn't, and you didn't care about well, not only us but also our clients. And without getting into a long coaching or an education discussion on insurance, but we're very thankful for you, Brian, and the way your approach that you take, because when we started working together, I said, hey, here's what I would like to do. And that is when I begin to analyze a facility, I'm going to get their current insurance declaration page, but here are the coverages that I want. And then you added on to that and said, here's what you're going to need. And so now when we have a facility that we're looking at, it's been comforting to know that the drill. We don't have to communicate with each other than, hey, here's the next one that's coming. Do your thing with the coverages that'll protect us and be as competitive as possible. And that's about as far as we have to go to get that piece taken care of during that time frame. So I'm very thankful for that. But that also speaks to what you had mentioned, and just making sure that you are covered. So once again, this insurance isn't a place where you're just trying to beat people up and get the lowest cost, because yes, things happen, and some of the instances you mentioned may be a one-off, but we have, for us, we have that built-in accountability, I guess you would say, because over 90% of the projects we do have private equity in it and partners in it, and so the last thing we would ever want is to have an occurrence, an insurance event in which we had to either come out of pocket more or weren't covered, or both, because we were underinsured. That is just that is not being a good steward of our business and our private equity partners' money. So even on projects now in which there isn't private equity and it's just me, it doesn't mean that I come back to Brian and then say, hey, we don't have any partners in this one. We're gonna swing for the fences, and I just need bare bones policy on this. Put that accountability for yourself in there to begin with, and listen to what Brian has to say to keep covered, because it only, in some instances, would only take one of those events, which could, cause some serious damage in not only that LLC that holds that property, but perhaps in your overall business if it's a claim that goes beyond any policy you have in place, or even an umbrella policy. Would you add anything to that, Brian?
Nope, you're spot on.
Well, let's talk in the short time that we have left here, Brian. Tell us a little about from your end. From it doesn't even have to be from the insurance side, but just your overall take as to where we're at in the investment cycle for self-storage. And I won't ask you to get out a crystal ball and predict when we're going to see a recession or values drop, but just where do you think we're at right now, and what are some of the opportunities that we have coming forth in the next maybe 2 to 3 years that you see from your standpoint, as both from an insurance standpoint in terms of your company and as a passive investor?
Yeah, absolutely. We've seen so much development over the last 5-10 years, and I don't have a crystal ball. I wish I did. I see self-storage still being a great asset class. I don't think it's going anywhere. I think we're going to start seeing ground-up developments slow down quite a bit, but we're still going to see a lot of these conversions. We're seeing a lot of the big box retail stores go out of business, and there's some nice space. And again, when you do your due diligence, there's some great opportunity, I think, in a lot of areas for self-storage. I think these conversion projects we're going to start seeing a lot more of. The market's going to do, whatever it's going to do. It's just kind of all over the place. And I think we'll know more, after this next, probably first quarter of 2021, once this election is done with and everything. But, for right now, we're seeing a lot of changes with banks. We'll see interest rates are still low, even though that, we probably anticipate them to go up a little bit. They're still really low compared to, 10, 15, 20 years ago. And I just see that the self-storage asset class is just going to keep on doing really well. I remember listening to a lot of the news and everything about self-storage, 10, 15 years ago. And I wish I would have just listened to it and just went all in and had the money to invest in it, because I'm still all pro self-storage development. I think it's really going to keep on going, but you'll definitely see some changes. Some of the cap rates that you see out there that people buying at. I think people are putting money in it, but I think you got to be a little conservative, just because the unknown.
Understood. Well, we are definitely keeping our ear to the ground as well, and we feel that 2020 is going to be a very robust year because, as you mentioned, interest rates are low, and but that doesn't mean that we're not constantly looking for any sign that is going to change, and keeping an eye on our plans in terms of an exit strategy, and doing our best to predict cap rates at that exit, which is all surrounding the interest rates and what we predict in the future. So it is a moving target, always is, but we also are very, very bullish on what's going on in the industry right now. So with that, I want to be mindful of your time. If you would, Brian, if people want to find out a little bit more about your company, what you do, and perhaps even reach out for their facilities and maybe even send some business your way, how do they get a hold of you?
Sure. So you can check out our website. We have a self-storage division website within our company. It's ioaselfstorage.com. Again, that's ioaselfstorage.com. Or you can send me an email directly at Brian, BRIAN, B at ioausa.com. You can also call me in the office. My direct line is 856-532-0503. And you can find me on LinkedIn as well and Facebook.
Fantastic. Well, Brian, once again, thanks so much for taking time out today. And if you would, how about a parting success quote for our folks? It could be your own or something you've heard along the way in your travels, or as things that you've read that you can leave folks with.
Sure. I don't know who said this quote, but this is a good one that I always stand by. But failing to plan is planning to fail. So, always keep on planning. Make sure you're doing all your due diligence and making sure that you're doing things the right way. Don't cut corners, and everything will definitely have a much better outcome.
Yeah, I every time I think that I've got that licked or got a good handle on it, we work on our business plans constantly, and then continue to hone and tweak those throughout the quarter, and utilizing traction in our business. Gino Wickman's book and his whole entrepreneur operating system, and really mastering that has been very, very helpful. And we already thought we were in pretty good shape, but if put another way, I think if you don't have a plan coming into the year, then the market will make one for you. So very, very important to do so. So with that, Brian, again, thanks so much for your time, and look forward to catching up face to face at the next, perhaps one of the next self-storage trade shows.
Yep, that sounds like a plan. I'll be speaking as well at the Inside Self-Storage event. There's a risk management seminar going on. So if anyone's out there, feel free to sit in on it.
Great. Well, looking forward to that. And I plan on seeing you there in Vegas as well. So Brian, once again, thanks for your time, and we'll catch you on the flip side.
Yep. Thank you so much.
Ladies and gentlemen, thank you for listening as always. Now, we're going to be talking about topics like this that are on target for the times that we find ourselves in. So it is important that you are listening to this podcast every single week, because the guests that I'm going to be bringing on and the topics we will be covering are relevant to what we are all going through right now. And it's just going to get better and better and better in terms of the content that we're going to be discussing, and it's going to be more timely than ever. So please, make sure you subscribe to the show, and make sure you're paying attention to these episodes as they are coming out during this period, as I am specifically going out and finding guests who are providing really valuable information you need right now. So thank you so much. We'll see you next week.